In this video, I want to talk about whether we should buy Google right now. The price is $154 and it went down this year when Bud and Gemini had issues, but it has recovered since then. So is it a good time to enter right now? Ticker symbol GOOGL has a market cap of $1.9 billion and the revenue is $300 billion. Net income $73 billion and it has cash of more than $69 billion. This is free cash flow. So the earnings per share is 5.8. This makes the P ratio 26.5. Now the gross margin is extremely healthy at 56%. It has been consistent for the past 10 years. For this quarter, it announced that its revenue has increased year on year by 13%. Now that particular quarter, it contributed $86.3 billion to the total of $300 billion. There were concerns talking about its workforce reduction contributed to the revenue because they managed to have a savings of $3.9 billion. And also, they adjusted their lifespan of their servers and their equipment and added another $3 billion due to changes in depreciation. So their expenses reduced, causing an increase in their net income. So some of the investors were thinking whether this net income is manufactured by these two items. However, it's also noted that Google is still growing extremely fast, as you will see in a moment's time. This is supported by their AI advancement and investment, as they have invested into OpenAI's competitors. At the same time, they are also looking to grow through acquisition. And the latest talks is about investing into HubSpot, which is a $35 billion company that's growing extremely fast. With that in mind, let's look at the valuation of Google. For Google, because it's a growth company, I'm using discounted cash flow with its earnings per share of 5.94, a growth rate of 20%. The reason why I'm choosing 20% because the past 10 years growth rate is 21.8%, past 5 years is 25%, and past 3 years is 32%. So you can see that I'm taking a conservative approach and taking the lowest growth rate, which is the past 10 years growth rate. So I'm taking 20%. Assuming it's going to grow for another 10 years, we will discount rate of 12%. The present value of Google's growth component is $88.53. However, after 10 years, I don't expect Google to disappear. There will be a terminal value. What it means is Google at that point in time, after the 10th year, 11th year onwards, they will be growing at the terminal rate, meaning to say they are no longer growing. So for the next 10 years, Google will still be around producing profits for the shareholders. However, they will still grow at an inflation rate of 4%. That's why the terminal value from year 11 to year 20 will be $80.57. Adding these two together, present value plus the terminal value, it will be a total value of $169. Again, Google's current price is $154, so there's still a bit of upside in terms of the valuation. In my opinion, Google is a beautiful company that will continue to grow and you'll be around for the next 10, 20 or even 30 years. So right now, I think it is slightly undervalued and we can invest into it. Disclaimer, I've invested into Google. You should do your own due diligence. If you like this video, follow to learn more.